The macro environment, as described by my colleague Andy Hartwell, our Client Insights lead, is relatively benign and better than this time last year. Economic growth rates are likely to be similar to 2024. Inflation and interest rates are lower and may ease lower still. In the world of not very long ago, things might be looking pretty good for 2025. Always there are risks, and those risks in 25, which are legion, include the risk that having turned a much-needed macroeconomic corner, policies or events forfeit an otherwise promising opportunity. Governments, particularly in the West, are seeking ways to contain national debt and taxation, while at the same time trying to find ways to fund ambitious long-term investment projects and stimulate growth. For the sector at a high level, the overall position suggests further growth in AUM, with a particular focus on private assets and private capital. With competitive pressures set to continue, combined with a crucial need for resilience, it's an environment where consolidation at the fund level and M&A among smaller and mid-tier asset managers is likely to accelerate further. We also expect to see further reorganisations and restructurings within firms tackling efficiency challenges and looking for savings, and looking also to be more agile in their operating model. As investors become more sophisticated and seek diversified portfolios, managers will look to respond by offering a broader range of hybrid fund options and solutions, including on a bespoke basis. The growth of private credit is a big story and set to continue, and if anything, to intensify. Governments are looking to guide their regulators and those managing particularly pension fund allocation into believing in non-standard assets, so infrastructure investment over gilts, particularly around energy transition and critical infrastructure. That's going to put even greater focus on our work around long-term asset funds, LTAFs in the UK, and their European counterpart, the LTIF, as well as a focus on the consolidation and professionalisation of pension funds. Prospects of progress are high, but the level of progress said to be required is close to aspirational. There is also a clear risk of setback, and should that occur, there will be a question as to whether the current ambition risks losing momentum. There is clear tension between long-term asset investment and liquidity, and that tension is a source of setback risk. In time, but not necessarily soon enough, tokenisation will almost certainly be part of an eventual solution. This year's Look Ahead introduces a novel twist to horizon scanning. Taking inspiration from the cinema, we have tested pulses and imaginations on variations of utopian and dystopian futures. We asked 500 in-house legal professionals across the globe to predict the future by comparing cinematic scenarios with reference to today's global challenges. How did the asset management sector respond? I'm pleased to say with some considerable optimism. And while some of the scenarios remain more science fiction than science, for others, the science has fast caught up. Last year, discussion centred on AI's evolving role as an enabler in asset management. A year on, some of that discussion now focuses on the regulatory framework within which that enabling is now happening. However, concerns about the darker aspects of technology are also evident. AI is an enabler not only of positive change, but of, for example, cyber attacks. Andy Hartwell, in his macroeconomic overview, referenced the 1950s novel I, Robot by Isaac Asimov. It was Asimov who observed that, sadly, science gathers knowledge faster than society gathers wisdom. Interestingly, as technology assumes more tasks, the value placed on human abilities to navigate complex emotional, political, and cultural landscapes is becoming more important and more valuable. For any international business looking to safeguard its supply chain and anticipate problems, human expertise on a combination of international trade law, treaties, tax, cybersecurity, going to be high on this year's wish list. Crypto, particularly Bitcoin, has seen huge outperformance in 24, especially since Trump's re-election, and the number of crypto users has grown and will continue to grow. Volatility on the downside can, of course, happen just as quickly, perhaps even quicker, but it is now the case that most central banks are either considering central bank digital currency projects or already pursuing them. Over 30 governments already have pilots in operation, so we see digital as very much back. Whatever versions of the future emerge, one thing is clear: the asset management and investment fund sector will play a critical role in funding and shaping those futures. We see that in energy transition, including in the blue economy, in emerging technology, in data, in health and life sciences, but also we see positives this year in real estate. In jurisdictional terms, we see parts of the Middle East as particularly well positioned, and we see the APAC, China, Middle East investment flows as significant and only likely to grow in importance. China, if anything, we see as an even more important legal market if we are to help safeguard our clients' interests. As regards AI and technology, to avoid the dystopian iRobot type scenarios, one factor will be the regulatory landscape, understanding the possibilities and the parameters that need to be put in place. But that new regulatory landscape must have the flexibility to cope with rapid evolution. Neil Stephenson, in the 1999 novel Cryptonomicon, observed, "Once a technology rolls over you, if you're not part of the steamroller, you're part of the road." At the same time, in terms of prospects for the year ahead, 2025, more important factors seem set to be interest rates, inflation, and avoiding conflict, both actual wars and trade wars, and the more traditional human virtues of exercising good judgment, backing value, and thinking ahead. Whatever tools, data, and talent help in achieving that outcome, they will be more than welcome. Please do enjoy exploring this production and our survey. Whatever else happens, we look forward to working with you in the asset management and investment fund sector in the year ahead. Thank you.